2023 is the year of the pre-sales, and in today's video, I'm going to talk about two of the biggest risks of pre-sales and what you can do to avoid them. If this is your first time to the channel, my name is Hasan. I'm a real estate agent in Vancouver. I make educational real estate content to help you in your real estate journey. I also make content to help you make your move in and around Vancouver. So if you're interested in chatting about real estate, you can book me in the Calendly link below or send me a message. All right, so I'm proclaiming 2023 as the year of the pre-sale. Here's why. We all know, and if you follow my channel, you know that we talk a lot about real estate supply and supply being very tight over the years and decreasing as we go through the years. Now, developers are a large component, obviously, in that real estate supply. And I believe this year, as supply levels overall get pretty low compared to where we have seen in the past, I think developers really hold that key to providing the supply to this market this year and into next year. Now, if you followed my channel, you'll also know that we talked about how a lot of developers are scaling back and they're not releasing product to the market. So you may be like, Hasan, how are you thinking that developers are going to add to the supply when a lot of them are holding off? What I've noticed early in this year especially is a couple of the larger developers are probably seeing an opportunity early on right now to release projects while some developers, yes, are scaling back. We got to remember that there's an ebb and flow. So if one developer is viewing the market and seeing other developers holding off on releasing product, that now increases the value of their product. So already we're in the middle of January right now. I've been to 3 or 4 pre-sale events that have been jam-packed, and not only with realtors, I've been to realtor events where end users, clients are coming too because they want to get in on the action early on. So pre-sales are buzzing right now. And I think the other reason for that is there is now significant value in some of these pre-sales. So the developers are offering a lot of incentives. A lot of them are surrounded with Lunar New Year, which is basically end of January this year. It's coming up. So a lot of the incentives are aligned with that. We're seeing smaller deposit amounts. We're seeing decorating allowances, which are essentially a credit. I'm seeing prices in Brentwood that we haven't seen in years on certain pre-sales. So the developers that are putting product to the market, they're doing so aggressively at good prices. And I truly believe that this year there's going to be a huge uptick in the amount of people purchasing pre-sale, because what happens obviously is when real estate gets more unaffordable, especially for that first-time buyer, they look for more ways where they can maybe put less money down and not have to consider that mortgage, for example, until a future date. So let's talk about two of the biggest risks when it comes to pre-sales. And the first one is obviously getting approved for the mortgage. Now, one of the benefits also ties into the risk. So the benefit is today, you may be putting down 10% or 15% as a deposit. Now, that's the other thing that developers are doing now that's a little bit different is there are some high-rise projects out there that are only requiring a 15% deposit. Me personally, when I bought my pre-sale units, I paid 25% in a hot market. But today, again, you're able to do 10, 15%. So the nice thing for a buyer is they're putting down less money today, and then they're not having to get to the mortgage till later. But what happens if life circumstance, which we know it will, what happens if that changes between now and the time to get the mortgage? A lot of time we assume that we're gonna be earning more money, life's gonna get easier when it comes from a financial perspective as we grow in our careers, but that may not happen. So what can you do today to protect yourself from not being able to get the mortgage at a future date? So what you should do, in my opinion, is there are a few lenders out there that will actually give you what's called a firm approval today, meaning that they don't have to reapprove you at completion time. TD Bank, RBC, Scotiabank are at least 3 of the lenders that do offer this. I do know Scotiabank will give you a firm approval today, even if the project completes 18 months from now. When I did my RBC mortgage, mine completed over 2 years after I got my firm approval. There was no reapproval process at the end. They just gave me my money. A lot of people are not familiar with this pre-sale program. So my recommendation to you is if you've bought a pre-sale or if you're looking at buying a pre-sale this year, you need to get in touch with these lenders. When I'm working with my clients, I tell them right away as we're looking at this product to have a pre-approval going, even though the pre-approval doesn't mean much. But if you do decide upon a product, you can go through this firm approval process early on while you're in a rescission period. And the nice thing about this firm approval as well is you're not committed to it. So in a couple ways. So if you get to a point where it's completion time and you don't like that lender or you don't like that offer for whatever reason, you can just get an approval somewhere else at that time and say thank you very much. Number two, I know this is how it worked with RBC, is I had my firm approval in place, but the rates were better when completion came around and they just offered me the best rate. So they kept me as a client, they gave me a better rate, and I had that firm approval in my pocket. What that did for me is when I got the firm approval, at the time I was a rookie real estate agent and I had a full-time job that gave me a good salary. And I utilized that salary to get the approval on the mortgage. But as soon as I got the firm approval, and I don't suggest you do this, okay, this isn't financial advice, definitely don't do this, but as soon as I got the firm approval, I quit my job and I went full-time real estate. And I knew that I would not have got approved for the mortgage if I only had real estate because my income was inconsistent. But that's what it allowed me to do. I quit. Now, banks at any time, they don't have to lend you the funds. They can decide against giving you the funds at completion. So that's a risk you have to keep in mind. In my situation, as long as my credit rating stayed the same, they would advance me the funds. So again, to mitigate the risk of not getting approved in the future, talk to those 3 lenders or your mortgage broker, ask them about the pre-sale program, ask them about getting a firm approval, and that way you just have it in your back pocket. Like, who doesn't like that level of security to know that no matter, what happens, reasonably, no matter what happens, you're going to get approved for that mortgage. Now, before I tell you about the second risk, I did a more extensive video on pre-sale mistakes. It's one of my most popular videos. It has my most amount of information in it. I'm going to link to it here. You want to watch it after you watch this video because there's some additional stuff you need to watch out for when purchasing pre-sale. But for this video, the second big risk, and this is becoming more prominent now that I want to talk about, is having a situation where you purchase a pre-sale where the project doesn't complete. And this is happening more and more frequently. Sometimes what happens are developers are not getting their financing. They're having issues with the financing that they need. And what ends up happening is you ended up signing off on this agreement. You have a disclosure statement there. The disclosure statement has what's called an outside date in it. And an outside date is basically the latest possible date that the developer has to complete by before they have to give you back your deposit. Now that outside date, it's not the same as the completion date. So they may say expected completion is fall of 2025, but outside date might be in 2027. And now there's actually stipulations in the disclosure statement saying that if something were to happen outside of the developer's control, they're allowed to extend the outside date, and often it'll say by how long or how frequently, how many times they can extend it. So that's one part of the disclosure statement you have to pay strong attention to, because that's how long your deposit can be held for. So what has actually happened, here's an example in Richmond. There's a project at 3 Road and Alderbridge. Clients purchased into this pre-sale with their deposits. I want to say in 2017, 2018, they put their deposits down. The builder was having issues getting the funding for the project. They stopped being able to pay their trades. They had barely broken ground. They hadn't really done any work. Long story short, they then tried to sell the project in its entirety to another developer. Other developers weren't bidding on it. These purchasers, unfortunately, they still have their deposits held up. Now, they put these deposits down in 2018. We're sitting here in 2022 where the market has increased significantly. Even if they're to get their deposits back today, there's a nominal interest they might get on it. That money is worth so much less today. They couldn't turn around and buy another Richmond presale project. They're probably looking at purchasing something out in the valley. So this is a significant risk. What happens if your money sits there and the project doesn't happen and you get that same amount of money back 4 or 5 years later? How do you guard against this? Well, number one, you got to look at the developer track record and reputation for completing the type of projects you're looking at. Now, this is not to say to not work with other developers, because oftentimes other developers, they'll give you more incentives, you'll get more value. There's some really good smaller developers that oftentimes they even have better customer service or client service teams to help you, more of a one-on-one type of a feel. But if you're looking at, for example, your first pre-sale, high-rise construction, I think it's really important to work with a developer's name who has a history of completing projects. And the way that you're going to find out about the developer is obviously your realtor. If your realtor can't tell you about past projects, you're working with the wrong realtor that's just trying to get a sale out of you. They should be able to sit down with you and say, these are the projects that they've done before. So look for the track record and a track record of completing projects. That disclosure statement I talked about, one of the first 2 pages is going to be like a developer resume, and it's actually going to list out the directors of the company, what their experiences in the past, who they may have worked with, projects they may have completed. So outside of doing Google searches, look at that disclosure statement, because again, that's going to give you their profile as a developer. And the second thing you can do to mitigate that type of a risk is you can wait until they've actually broken ground and they start constructing the project. Now, people may look at this as bad advice because you don't get your first pick of the unit. The good units are all gone. It really depends what you're looking for as a buyer. Are you looking for an end user unit? Are you looking for maybe one of the 2 bedrooms or the larger 3 bedrooms that often tend to sit a little bit longer? The nice thing is once the developer actually receives their financing for the project, oftentimes they'll put some more incentives out there because they actually don't need all the cash up front anymore. At the start, they're really trying to obviously get the cash to be able to get that financing. But what I've seen is when there's select units left, they will now drop down the deposit amount. So look for these types of projects where they have what you're looking for, but they're adding incentives because they just want to move out the rest of the inventory that they have. It's not always a bad decision to purchase after launch. You can sometimes get some good deals. Sometimes you can negotiate a little bit as well because the developer does want to clear out the units, but they don't necessarily need that cash up front. So there you go, guys. I hope you learned something about pre-sales and some of the risks in this video. If you did, like this video, subscribe to this channel so you don't miss future videos as well. If you want to talk about real estate in Vancouver, send me a message anytime. I'd be happy to speak with you. Outside of that, thank you so much for watching and have a wonderful day.